Welcome to making the stock market easier. I've been doing that for folks for 50 years, trying to make the market easy, meaning that they try to make this market so complicated, so you got to run to find a broker or someone to explain what's going on, when the market is really nothing more than following the price of the stock, which means you're following the money, okay? What I want to talk about today is, I think will help you to understand, where's this market going to go from now? Where do we come from? What's going on here? Well, the bond market is the most important thing, and they don't want you to know much about the bond market because you wouldn't need brokers. The bond market, okay, or I should say the bond yields, they drive if you're going to buy stocks or not. So they drive the stock market, or put it another way, they drive the sentiment of the stock market, okay? Now, if you remember, Moody's came out and downgraded, and everybody just blew it off as, oh, nothing, don't worry about it. Well, it is a big deal, because the minute that Moody's downgraded, the bond investor dumped, and yields soar. The 30-year yield, they dumped their here. If you look at TLT, let me put TLT up here for you. Okay. Okay, so TLT. The question is, I'm trying to answer for you, is the market going to go higher or not? And that's what I'm trying to answer for you. Well, the bond market will tell us. The bond market right now is telling us when TLT, take a look at TLT, how TLT is just dropping again. That means interest rates are going up. So the 30-year, the minute they announced the downgrade by Moody, people dumped their bonds. And the 30-year yield started out, went right up to 4.97. Now it's over 5%. That is very, very bad for the economy, for the stock market. That's why yesterday they just poo-pooed it off, like, oh, it's no big deal. It's only an opinion. It's a very big deal because it drives, anything that drives the bond yields is a big deal. So we're over 5%. We haven't seen that since 2007. Now, the other thing is that the bond market is warning us with the yields going, with the TLT going down. They're saying, look, we got to be really careful here because that new tax cut bill, that's going to really increase our debt and our deficits. And we haven't seen Congress try to fix the debt or deficit for years. So that means our debt service, if they get this bill through, we're going to go from 1.4% of GDP to 3.1%. That will kill the economy, kill the stock market, because if you kill the economy, you're killing earnings. And they continue, Congress, to ignore the debt. Now, going back and putting these two rallies in perspective, if you take and look at the rally that we had, here, I'll put the S&P for you. The first rally we had in the S&P, okay, was because, as you know, Trump got fearful. What did he see? Well, he saw on April 9th, the reason he paused was for one reason only, because he watches the Treasury yields. And the Treasury yields were soaring because when he put a pause on, okay, everybody dumped, okay? And so yields started to soar. And the yields, again, at that time when he paused, that was around 4.95. We haven't seen that since 2007. So again, that's why he paused, because people were really upset, okay? And they were starting to dump their treasuries. And then his rating went down from positive to about -8. That panicked him. So the next thing he did is he goes, well, I'm going to make a deal with China. I'll just say I'm going to make a deal. There was no deal. It was just a letter of intent that they would drop, China would drop their tariffs from 140 down to 24%. Okay, just temporarily. We'll talk about it. It's like two buddies sitting there talking. There's no deal. So again, our yields again continue to go up, and then finally to try to fix this, to make this monetary policy since April 9th that failed. He's trying to make it look like a victory. He runs over to Saudi Arabia and sells them 18,000 chips, NVIDIA chips. We didn't get much of a rally out of that. So my whole point is this, is the bond market will always tell you, okay, what is the stock market going to do? You just got to know how to read it, and it's not hard. So for more information on how to read stocks, or stock picks, how to read the bond market, I can help you.